I spent the last year trying to answer one question. What's the fastest, most reliable path to financial freedom in 2026? Not the safest, not the most traditional, the fastest. And what I found is so obvious in hindsight that I'm almost embarrassed I didn't see it sooner. I'm going to show you exactly what I discovered. The data, the math, the logic. And by the end, you'll either think I'm crazy or you'll wonder why you didn't see it sooner too. Let's go. Part 1. The old path is dead. Here's what we were told. Get a degree. Get a job. Work 40 years. Put money in your 401k. Retire at 65. Enjoy your golden years. This was the formula. The safe path. The responsible thing to do. There is just one problem. It doesn't work anymore. The math on traditional retirement. The average 401k balance for Americans in their 60s is about $635,000. Sounds decent, right? Except Americans believe they need $1.26 million to retire comfortably. And that number is probably low. Here's the kicker. Over half of American households, 54%, report having no dedicated retirement savings at all. Zero. The traditional path requires you to work for 40-plus years, save diligently the entire time, hope the market cooperates, hope inflation doesn't eat your savings, and hope you don't get laid off, sick, or obsolete before you hit the finish line. That's a lot of hoping. The dollar is melting. Remember when your grandparents talked about buying a house for $30,000? A candy bar for a nickel? That wasn't ancient history. That was the purchasing power of the dollar before it got systematically destroyed. In 1971, President Nixon took the U.S. off the gold standard. The dollar was no longer backed by anything physical. The government could print as much as it wanted. And print they did. Here is the math. $1 in 1971 is worth about $8 today. Put another way, today's dollar only buys 12.5% of what it could buy in 1971. Your money is melting. Every year you hold cash, you're getting poorer. The game is rigged against savers. This isn't conspiracy. This is basic economics. The Federal Reserve targets 2% annual inflation, which means they're trying to make your money worth less every year. Jobs are disappearing. And then there is the AI thing. Goldman Sachs predicts AI could replace the equivalent of 300 million full-time jobs globally. A quarter of all jobs in the US and Europe could be performed by AI entirely. McKinsey estimates 400 to 800 million people could be displaced by automation and need to find new jobs by 2030. That's not a typo. 400 to 800 million. The jobs most at risk? Computer programmers, accountants, legal assistants, administrative roles, customer service, the safe office jobs that required a degree and promised stability. The path our parents took, get educated, get hired, stay employed, is breaking down in real time. This isn't doom and gloom. This is data. And the data says the traditional path has a very low probability of getting you to financial freedom. So what's the alternative? Part 2. Where the world is going. Before I tell you the strategy, you need to understand where things are headed. Because the optimal play depends entirely on the landscape. And the landscape is shifting fast. Everyone becomes a creator. Here is a stat that stopped me. The creator economy is projected to grow from $250 billion in 2025 to over $500 billion by 2030. Some projections put it at $1.3 trillion by 2033. That's not a trend. That's a tectonic shift in how value gets created and captured. Why? Because attention is the new oil. And individuals, not corporations, are increasingly the ones who control it. Think about it. You probably trust a random guy on YouTube more than a Fortune 500 company's marketing department. You probably learned more from podcasts last year than from any institutional source. The gatekeepers are gone. Anyone with a phone and an internet connection can build an audience. And an audience is leverage. Everyone becomes a solopreneur. There are nearly 30 million solopreneur-run businesses in the U.S. right now. They contribute $1.7 trillion to the economy. And the number is accelerating. Entrepreneurs are filing over 440,000 new business applications per month. That's 90% faster than pre-pandemic rates. By 2027, over half of the U.S. workforce will have spent time as a solopreneur or independent contractor. This isn't people giving up on employment. This is people realizing something important. The internet made it possible for one person to build something that used to require a team of 50. AI is making it possible for one person to build something that used to require a team of 500. The leverage available to individuals has never been higher. And it's only going up. Crypto goes mainstream. Here's where it gets interesting. The total crypto market is currently around $3 trillion. Institutional forecasts project it to reach $10 to $12 trillion by 2030. Messera's bull case is $30 trillion. The tokenized real-world asset market, things like real estate and securities on blockchain, is projected to reach $9 to $19 trillion by 2030. ARK Invest's bull case for Bitcoin alone is $1.5 million per coin by 2030. Cathie Wood's personal projection is $3.8 million. You don't have to believe the most aggressive numbers. Even the conservative institutional projections represent a 3 to 4x from here. And here's the thing. This isn't speculation about some theoretical future. Wall Street is already in. Spot Bitcoin ETFs gave institutional money a government-approved bridge into crypto. BlackRock, the largest asset manager on Earth, is buying Bitcoin. The rails of the financial system are being rebuilt on blockchain. Not because crypto people want it, because it's more efficient. It's inevitable. The question isn't whether crypto will be huge. The question is whether you'll be positioned when it happens. Part 3. The goal. So let me cut to it. If you accept the premises, traditional path broken, dollar debasing, AI displacing jobs, creator economy exploding, crypto going mainstream, then there is a logical conclusion. The goal is to accumulate as much Bitcoin as possible. I know, that sounds like something a crypto bro would say. Bear with me. Why Bitcoin specifically? Bitcoin has returned over 230% annually since 2011. That's 10x higher than the Nasdaq, the second best performing asset class. Over the last decade, Bitcoin has outperformed the S&P 500, gold, real estate, bonds, everything. And not by a little, by orders of magnitude. Yes, it's volatile. Yes, it crashed 80% plus multiple times. But if you zoom out and look at any 4+ year holding period, it's outperformed everything. And unlike the dollar, there will only ever be 21 million Bitcoin. No central bank can print more. No government can inflate it away. This is the first time in human history that regular people have access to a hard asset that can't be debased, can't be confiscated if stored properly, and can be sent anywhere in the world instantly. Gold couldn't do that. Real estate can't do that. Only Bitcoin. The question is, how do you get more of it? Part 4. The problem. Here is the thing nobody talks about in crypto circles. You can't invest money you don't have. All the Bitcoin enthusiasm in the world means nothing if you're living paycheck to paycheck. All the conviction about where the market is going is worthless without capital to deploy. Before you can accumulate Bitcoin, you need what I call monthly investable income. This is the amount left over after all your expenses, the money you can actually put to work. For most people, this number is 0 or negative. The average American saves about 3 to 4% of their income. At that rate, you're not building wealth. You're treading water while inflation slowly drowns you. The game, then, isn't primarily about investment strategy. It's about cash flow. How do you generate enough income, reliably, repeatedly, to actually accumulate assets? This is the real question. And this is where the formula comes in. Part 5. The solution. If the goal is maximum cash flow with minimum constraints, what's the optimal vehicle? I looked at every option I could find. Employment, freelancing, traditional business, real estate. Here's what I landed on. A digital business. Specifically, a scalable, location-independent business that you can run from a laptop that doesn't require employees, inventory, or physical infrastructure. Here's why. The math on digital business. Starting capital requirement. Under $5,000 for most models. 84% of solopreneurs self-fund with their own capital. Time to profitability. 77% of solopreneurs report profitability in their first year, well above traditional employer businesses. Income potential. 20% of solopreneurs earn between $100,000 and $300,000 annually. Without employees. Without an office. Without permission from anyone. Location. 51.6% operate from home. The rest operate from wherever they want. Scalability. Digital products, software, and services can be delivered to unlimited customers with near zero marginal cost. One person can serve 1,000 customers as easily as 10. This is leverage. Real leverage. Compare this to a traditional business. Rent, inventory, employees, regulations, permits, insurance. Compare it to employment. Trading time for money with a hard ceiling on both. Digital business isn't just a good option. Given the constraints of the modern world, it's the obvious option. But there is a problem with digital businesses too. Part 6. The accelerant. The problem with digital business is distribution. You can build the best product in the world, but if nobody knows it exists, it doesn't matter. And traditional marketing, ads, PR, partnerships is expensive and competitive. So how do you get attention without massive capital? Content. Why content is the multiplier. Here is what most people don't understand about content. It compounds. A piece of content you create today can be found tomorrow, next month, next year. Unlike an ad that stops working the second you stop paying, content builds on itself. Every video, every post, Every article is a tiny employee that works for you 24/7, forever, for free. And with AI tools, creating content has never been easier. The barriers to entry are the lowest they've ever been. More importantly, content builds trust at scale. A stranger finds your video, watches it, learns something valuable. Now they trust you a little. They watch another. Trust builds. By the time they find your product, you're not a random company asking for money. You're the person who helped them. This is why the creator economy is exploding. This is why individuals are outcompeting corporations. Attention and trust are the scarce resources, and content is how individuals capture them. The hyper-targeted play. Here is the key insight. You don't need millions of followers. You don't need to go viral. You need 1,000 true fans who care deeply about the specific problem you solve. The internet enables hyper-targeting. Whatever niche you're passionate about, whatever weird, specific problem you can solve, there is an audience for it somewhere. And that audience can be reached directly, without gatekeepers, without permission. Find your niche. Create content that helps them. Build a product that solves their problem. Take the money and buy Bitcoin. That's it. That's the formula. Part 7. The formula. Let me crystallize what I'm saying. Content, commerce, currency, freedom. Step 1. Content. Create value publicly. Share what you know. Build an audience in a specific niche. This generates attention and trust, the two resources that are hardest to buy. Step 2. Commerce. Build a digital product or service that solves a real problem for your audience. This generates monthly investable income, cash flow that doesn't depend on a job. Step 3. Currency. Take your profits and allocate them to Bitcoin. This converts your work into an asset that can't be debased, can't be confiscated, and has dramatically outperformed every other store of value. Step 4. Freedom. As your Bitcoin stack grows and your business matures, you achieve real freedom. Location independence. Time sovereignty. Financial security that doesn't depend on an employer, a government, or the whims of the economy. This is the formula. It's not the only path. But given everything I've researched, where the world is going, what's breaking, what's emerging, it's the highest probability play I can find. Part 8. Why this works. Let me address the obvious objections. Isn't this risky? Yes. So is everything. The traditional path is risky too. You are just outsourcing the risk to employers and governments. At least this way, you control the variables. What if Bitcoin crashes? It has. Multiple times. 80% plus drawdowns. And yet, if you zoom out to any 4-year period, it's up. Dramatically. The question isn't whether it's volatile. It is. The question is whether you believe the long-term thesis. I do. I don't know how to build a business. Neither did I. Neither does anyone when they start. The difference between people who figure it out and people who don't is simply whether they start. AI tools have lowered the barrier to entry so much that the main requirement now is just showing up. This sounds like a lot of work. It is. But here's the thing. You're going to work regardless. The question is whether you're building something you own or building someone else's dream. The formula isn't a get-rich-quick scheme. It's a get-free-eventually system. And eventually can be surprisingly fast if you commit. Part 9. The protocol. If you're convinced, or at least curious, here is a practical starting point. Step 1. Define your niche. What do you know? What do you care about? What problems have you solved for yourself that others might have too? Your niche should be at the intersection of your genuine interest, your competence, and market demand. Don't overthink it. Pick something and start. You can refine later. Step 2. Start creating content. Pick one platform. YouTube, Twitter, TikTok, a blog. Doesn't matter. What matters is consistency. Create something valuable every day or every week. Whatever cadence you can sustain. The goal isn't perfection. The goal is reps. You'll get better. Share what you're learning. Share what you're struggling with. Share what you figured out. Authenticity travels further than polish. Step 3. Build something to sell. Once you have attention and trust, convert it into commerce. This could be a digital product, a course, a service, software, consulting. Whatever fits your niche. Start simple. A $50 ebook is fine. A $500 consulting package is fine. Revenue is the validator. It tells you whether you're actually providing value. Step 4. Stack Bitcoin. Whatever profit you generate, allocate a portion to Bitcoin. Not all. You need to live, and you need to reinvest in the business. But some. Dollar cost average. Don't try to time the market. Just steadily accumulate. Over time, the stack grows. Step 5. Iterate and scale. As your content compounds and your business grows, reinvest. Better content. Better products. More leverage. The flywheel starts spinning. Each piece feeds the next. Content builds audience. Audience enables commerce. Commerce funds accumulation. Accumulation buys freedom. Part 10. The truth. Here is the honest reality. This isn't easy. Most people won't do it. They'll read this, nod along, and go back to refreshing their email. They'll tell themselves they'll start someday. They'll keep trading time for money until there is no time left. And that's fine. Not everyone is built for this. But if you're the type of person who made it this far, who can look at data and follow logic and stomach some uncertainty, then you have a real shot. The traditional path is broken. The new path is open. The tools exist. The playbook is clear. The question is whether you'll actually walk it. Nobody is coming to save you. No employer is going to make you rich. No government is going to secure your future. It's on you. But the upside? Real freedom. Not retirement at 65 freedom. Real, live your life on your terms, go where you want, wake up without an alarm freedom. The math is there. The opportunity is there. What's your move?